Good afternoon, all. This is Pitamaran Achyutan Pishayadi from PDM Advisors Private Limited. Nifty is down by 16%, and certain people have their portfolio is down by 50%, 40%, 30%, or 20%. So they are confused of what has to be done to recover. So the simple way of getting recovery is to sell the holding that you have. So the first condition is that you should have a substantial quantity. For example, if you have a stock A with 1000 quantity at an average price of 1500, and now the stock is trading at 1200. So you won't be doing anything with that stock. You will be waiting for it to cross 1500 to do some trading. But instead of waiting, what I would suggest is that split this 1000 shares into 10 parts of 100 each and start selling from the current price. But when you keep on selling, it should be in such a way that when you complete all the 10 steps, the average selling price should be greater than your average buying price. Now, if you consider here, I have started selling at 1225 and my last selling it as 2035, whereas my average is coming down to 1630, which is greater than my average buying price of 1500. Now, what is the benefit of this strategy is that even if the market starts to move up, it will not move in a straight line on the upside. So there will be always some zigzags and you will get multiple trade opportunities. So when you sell at 1225, if the market falls to 1100, then you go and buy the same shares back, thereby generating an income of 12,500. So what you do is that you keep on selling on the rise, and whenever the market tanks to the specified buyback level, you buy it back, and again if it goes up, you again sell it. So this process will continue, and you will be generating a small income in every trade. So you are not inducing any capital into the trading system, but from the existing portfolio, you are selling 10% of the stock to generate some income and bring down your average buying price. So I would like everyone to go into your portfolio, look at the stocks which you have a good holding, and try in one or two stocks. Once you are comfortable, then you can do it for the remaining of the portfolio also. So one thing we have to understand here very clearly, that when you are in a spot where you don't know what is to be done, you can do something only if your quantity that you're holding is sufficient so that you can split it to 10 parts. If your portfolio is very small, 5 shares, 10 shares in different scripts, then you will not be in a position to do it. So whenever you generate your portfolio, you have to look into this fact that you generate in such a way that you have a substantial quantity of shares of one stock which can be split into 10 in case of emergency. So this is a type of emergency that when the market tanks, we don't know what is to be done. So you can use this strategy and generate some monthly or an annual income, or you can bring down your cost price. Even if the market doesn't come down and goes up in a one single direction also, your exit average is greater than your buying average, so you don't need to worry. So think about it and act quickly so that in this falling market also you can generate some income, and you will feel relieved that you have brought down your average price, or you have exited the stock in profit. So go through this go through your portfolio, select few stocks which is having high quantity, and check for yourself for these results. But you should always calculate the last buying price and the average selling price and the average before you start this process. And once you have planned the strategy, the second thing is to execute the strategy. Even if there is a gap up or gap down, you continue to follow the same thing and for complete the process and understand it completely. I hope in this problematic area you will have a look at this strategy and implement and have a good return. Thank you for watching.